Hey guys, welcome back to my channel. Hope you guys are all doing really well. If you're new to my channel, welcome. I do a lot of study, career and personal finance related videos on this channel. So if that's something of interest to you, then be sure to subscribe to my channel down below and be sure to check me out on Instagram as well, Success by Sanjana. Now, I have another very exciting video for you guys. It is a collaboration with Jacob from Advisory Corp Accountants. So we are going to be shedding some light and talking all things personal income tax related. Now, obviously we know that tax time is just around the corner and we are all going to be busy, submitting our tax return. So I thought no better video than this one to help you guys with tax time and how to submit your taxes, how to get the most out of your return. I'm very excited for you guys to check this video out. Be sure to check out all of Jacob's contact details down below, and without further ado, let's just get started. Hey guys, welcome back to my channel. Hope you guys are all doing really well. As you can see, I've got a special guest here. I've got Jacob from Advisory Corp Accountants, and we're going to be sitting down with him and answering some of the questions that you asked me around personal income tax. Hey Jacob, did you want to maybe introduce yourself and let my audience know what it is that you do?
Hey everyone, my name is Jacob. I'm a chartered accountant, founder and advisor of my own practice, Advisory Corp Accountants. I've been an accountant for like 7 years now, so really focusing on small businesses and helping individuals and their families grow their income and pay the right amount of tax and grow their financial future.
Awesome, thanks for that. Alrighty, let's get started. So I think let's start off with a little bit of an introduction as to maybe you can answer, what is a tax return, some basic sort of questions just to get this kick started. So if you can tell us a little bit about, what is a tax return for those people who haven't actually lodged one before?
So a tax return is pretty much, in Australia at least, we work on a self-assessed system. So meaning you assess your own tax bill. You may have seen a few memes about, the government knowing how much you owe but not really telling you how much you owe until you work it out. So a tax return is simply you declaring how much income you've made throughout the year and how much tax you should have paid throughout the year. And that is in contrast to how much tax you've already paid throughout the year. So at the end of the year, you might make $100,000. You should have paid $30,000 of tax. Your employer has paid $35,000 for you. So that's the refund you're getting of that $5,000. Vice versa. If your employer has contributed too much, you might owe the tax office money at the end of the financial year.
Awesome, cool, thank you for that. And how can I submit one and where can I submit one?
Yeah, so there's probably a couple of options for you if you're in Australia. Number one is to do it yourself through MyGov. MyGov has now really sort of been digitized a lot and is a fantastic tool. If you are a simple salary and wage earner with not too many deductions, you can go ahead on MyGov and get your tax return lodged through that. Your employer will have already submitted a lot of things to the government, so they will have a record of most things. That's your first option. Number two, if you're a bit more sophisticated in terms of your investing and what assets you have, or you're not as comfortable lodging it yourself and you want that added layer of having a professional sort of guide you through the process, you can go out and hire a tax accountant, and the fees on hiring a tax accountant are actually tax deductible as well. So that's probably your two options.
Awesome, thank you for that. So we're going to set the record straight here, and I've got a few true or false which I would like you to go through, and yeah, let's just get started. So the first one that you guys did send through was you have leeway in completing your tax return. The deadline isn't always what it says.
True and false.
Okay, yeah.
Essentially. Yeah. So the deadline to complete your tax return, if you're in Australia, is 31st of October. So that's a few months after our end of financial year, 30 June. So you got until 31 October if you're an individual taxpayer. However, if you get a tax accountant and you get that accountant before the due date, you get an extension. Generally, the extension is until 15th of May. So the busiest time for an accounting firm is pretty much the last 3-4 weeks that we just went through. So there are two sort of deadlines. However, If you need extensions, there are extensions available, but you do have to have some extenuating circumstance and at least a reason as to why you were not able to complete your tax return. Albeit being late, sometimes you may, or most times you may incur penalties and interest charges. However, the ATO is understanding if there were extenuating circumstances, and sometimes you can work with your accountant to sort of maybe get those interest charges and penalties remitted or worked on. So yes and no, true and false, I think.
Cool. The next one we've got here is, I don't have to declare income from CENTRELINK on my tax return.
Yeah, false.
False?
Big false. The ATO will actually already have a copy of how much government allowances you are getting. Depending on each government allowance is slightly different, the way their taxes are different, and the amount of tax that you will owe versus how much they've already withheld is a little bit different as well. But you definitely must record it in your tax return. There's actually a line item for government payments and allowances. So yeah, false for that one.
Even if they've got record of your details, you still have to put it in yourself.
Yeah, of course. So the whole thing with the ATO, they will data match any records they have versus any records you've submitted. So if there's a mismatch, if the ATO know that you've got Centrelink income but you haven't put that in your tax return, that will trigger a red flag and probably lead to a review and potentially audit on that as well.
Okay, so you need to be as honest and open as possible.
That's it. They already know most things. So and the more tech there is out there, the more dangerous it could be.
Okay, cool. So the next true or false we've got here is, I only need to complete a tax return when I'm 18 years old.
True and false again. There are, for example, if you're a part of a family group who potentially has income in your name or has different assets attached to you or something like that, then you may be required to complete a tax return. If you were working, like the Australian, I think when I was around, the working age was 14, 9 months.
Yeah, I still think it's around that age.
Yeah,
as well,
so I know I had to lodge a tax return when I first started working at that age. It's dependent on how much income you earned, what type of income you earned, and a few other different factors. So false, you can be under 18 and still need to prepare a tax return. Yeah.
Cool, thank you. This one's a very common one that I get asked. Can I claim on work clothes because I need to be well groomed at work?
Again, true and false. Obviously, there are deductions that you can claim as part of your uniform or as part of your specific work. So, however, personal grooming and that sort of thing, really depending on which job, but I would say most jobs, it's more a private expense. So, the fact that you are well groomed is not attributing to your income. You could be less groomed and probably still make the same income, and it's probably more a personal thing. I don't know how many friends you'd have if not friends, but how many people you'd have if you didn't shower for about 2 weeks. So it's probably more a personal expense on that one.
Cool, thank you. Next one we've got here is, I'm entitled to claim $300 for work-related expenses as this does not have to be substantiated.
That's actually true. That's a phenomenal little question. There's probably another accountant watching the YouTube channel. Yeah, that's actually true. If the first $300 is not substantiated by the form of receipts and things, you may be required to provide an estimate. So the first 300, no, but if you have $301, it exposes the entire amount to receipts.
Right.
So if it's under $300, no, but if it's $301 or plus, then even the first 300.
But that doesn't mean that you can just fake those expenses and just put in anything in case you get audited.
Correct. There must be some reasonable grounds on how you reach that.
Okay, cool. The next one we've got is, if you don't sell an asset, you don't need to pay tax. Yeah,
that's true. True for most assets and true for most passive investors. If you have a property, for example, and it's an investment property, until you sell the asset, there is no CGT event that happens. So the taxing...
CGT is capital gains tax, for those of you who don't really know.
That's it. So the tax you pay on the sale of assets is capital gains tax, and that event only happens once an asset is crystallized and sold. So yeah, true.
Awesome, thank you. So that's the component of our true and false. Now let's get into some of the nitty-gritty questions which you guys did also ask. So getting started here, we've got, are there ways to minimize your tax return? I feel like this is the biggest question, the most popular question that you may get asked.
Definitely. Accountants are pretty popular people at 1 July until 31 October. So are there ways? Absolutely there are ways. And I think I'll go through a few of them, but number one, keep records, keep good, clean records. Don't wait until the end of financial year to think back and you've probably forgotten 90% of the things you've spent on.
Yeah.
So keep records as you go. You can do that using the ATO app. You can also do that by just setting up a digital drive or like a Dropbox or something, and every time you spend money for work, take a photo of the receipt so that you have that for year end. So getting organised, keeping good records, knowing what you can claim, you know, not just dismissing things, thinking you can't claim it. So know what you can claim and what you can't claim. And yeah, potentially onboard an accountant who is going to know what you can and can't claim. The 3 golden rules just generally are it must relate to your income, so any expenses that relate to your income, that you have a record of, and that you have actually spent the money on. So if it's a reimbursement, no, but if you've spent the money on it and it satisfies all those criteria, they are tax deductions. So those are the things I'd look out for.
Yeah, awesome. Thank you. Now, how does your tax return get impacted when you've got 2 jobs that you work at?
Yeah, so essentially all that really happens is both incomes are lumped together. So let's say you have 2 jobs, one pays you 70 grand, the other pays you 30. You've now got taxable income of $100,000. The only really significant impact is when you start a job, they always ask you, will you be claiming your tax-free threshold
on the
TFN declaration? If you've said yes to both jobs, you're going to be in a bit of an issue in that your employer has under-withheld to the ATO, and you are probably going to owe some tax because obviously you can only claim the tax-free threshold once. It's the first $18,200. So that's probably the only thing that may impact. But if you do have 2 jobs, just make sure on one of the jobs you tick that you don't tick the box that you will be claiming the income threshold, and you should be fine. Okay,
that's awesome advice there. I didn't know that one as well. Now, what are the tax benefits of buying an investment property?
Yeah, so there are a few. Probably the one that grabs the media headlines the most would be negative gearing. The gearing benefits is essentially as follows. Let's say you had an income of $100,000. You bought an investment property and you expected the value of that property to go up over time, which in Australia has proven to be alright. You may incur a rental loss, so as in the amount of rent coming in versus the expenses going out, you may incur a loss there. That loss is deductible. So if you had an income of $100,000, you had a loss-making property of $10,000, you made a $10,000 loss, rent versus all your expenses, that brings your income down to $90,000, meaning you're paying less tax because that income is being brought down. So that's the true impact. The 2 key ones are interest and depreciation on the rental property. But interest rates are quite low at the moment, so you're probably not going to see as much negative gearing as there was.
Awesome. Now, I've got a lot of international students as well on my social media that follow me. Now, they all ask, if I'm an international student, do I need to pay tax?
Good question. It really depends on your tax residency. So I know in the last budget they've changed this a little bit, but there are a few tests to determine your residency and where you pay tax. So some of these tests could include where you're domiciled, so where you were born, how many days you spent in Australia, where you've derived your income, whether that was Australia or overseas and things like that. And it really depends, I think, as well on the type of visa you have. There are some working visas and there are some where you don't work. So it really depends. There's actually it's not as black and white as it seems.
Where can they find this information?
The ATO website will be comprehensive. There's probably as well a lot of accounting firms who have a significant number of international students. I mean, I'll speak from experience. I don't have any international students on my records, but there are probably specialised accountants who would deal with that a lot more as well.
No, all good, that's fair. What are some ways I can get a higher return, like claiming stuff like the working from home sort of allowance as well? How can I do that?
For sure. So the big ticket deductions, how do you get a better return? Obviously claim as many deductions as you're legally entitled to claim and that you have the records to prove. The big one, motor vehicle, is a big one. There's 2 ways to claim the motor vehicle, whether you use the logbook method or the cents per K method. But if you use your car for work, definitely claim a tax deduction for that. Your working from home expenses have been quite high lately, obviously due to COVID. There is a set rate.
There's a few different ones that you can choose from, right?
There is, there's a COVID rate that's 80 cents per hour. There's also a 52 cent per hour if you have a set space for work. And then there's another actual expenses where you're literally claiming every dollar that you spend. So home office is a big one. We could probably make a video about how to claim home office all on its own. But there are a few different rates, and the way you claim it will sort of impact the length, the size of the claim. But home office is definitely one. Mobile phones, internet, anything that you use that has a connection to your work, that you use for work, cost of managing tax affairs, donations if you've got them. Just trying to think through all the income item labels. Travel, if you travel for work, not many people have been traveling, but if you are traveling for work,
that doesn't include that. Sorry, that doesn't include traveling from home to your office.
Correct. That's exactly right. So home to workplace, not deductible because everyone does that. However, the second and third leg generally. So if you're going to home to office, but then you go from an office to a client or an office to a different place of work, for example, that is a tax deductible trip.
Thanks for clearing that up. I have a HECS help debt and have been thinking about making some extra payments to pay it off quicker. If I get this done, are there any tax benefits for doing this?
Yes and no. So the ATO will force you to pay a percentage of your income depending on where you sit, compulsory extra payments. Obviously lowering it will take away from that payment, but having the balance there is what triggers off the payment. So you are going to have to make one regardless. Whether you make whether you make one or not, you will be forced to do it at the end of the year. So you don't actually get a deduction for it, so there's no tax benefit. It may mean you've already prepaid some, so your balance is reducing quicker, but no direct tax benefits from it.
Okay, cool. And we're on to our last question. So if I contribute to super, I can reduce my tax. How does that actually work?
Yeah, so this is a great question. And I've actually been talking to a few people that have been doing this lately. So I want to hit 2 points. Number one is when you make a superannuation contribution, you can claim a tax deduction for it in your tax return. And that's what we call a concessional contribution. The benefit is 2 things. Number one is you get a deduction in your name if you meet a few criteria, but generally you will satisfy that criteria. So let's say you contribute an extra $10,000 on top of the mandatory amount. You'll save your tax rate percentage times that $10,000. So 10 grand I contribute, that's a tax saving of $3,000 because it's a deduction in your tax return. Then when it lands in your super funds pay tax at 15% versus an individual who might pay tax between 0 and 47%. So there may be a significant tax impact long term when that money sits in your super fund versus your personal name. What I've also seen, and I will give a shout out to this, a lot of my clients are young and a lot of them are buying their first home, and there's a superannuation, there's a first home buyers assistance program using your super fund. That as well could really be an effective strategy from a tax perspective, and so it entails you contributing money to your super fund and then being able to draw that money out when you're ready to buy your first home. So tax benefits and some benefits for you to think about if you're buying your first home.
Is that also salary sacrificing? Is that what it's called? Or?
So salary sacrificing is where the employer makes the contribution for you. They are not amounts you get to claim as a tax deduction because the employer is claiming that amount when it goes in. However, the benefit of salary sacrificing is you not paying tax and then putting it over into your super fund. It's directly paid pre-tax from your employer directly to your super fund.
So that brings your taxable income lower, which in turn is lower tax. Okay, cool. Alrighty, so those are all the questions that I've got here for you today. Thank you for answering those questions and debunking some of the myths that we went through. I would like to sort of finish this off with maybe if you can give 3 tips, you know, tax time is coming up, 3 tips or advice that you'd like to give to my audience, you know, in time for, you know, doing their taxes as well.
For sure. I think number 1 is always make sure you're prepared throughout the year versus rushing at the end of the year, frantically trying to repiece the whole entire year. So probably advice you could take on board next year if you haven't already. But that's number 1, get organised, keep good records throughout the year. Number 2 would be don't claim things that you are not supposed to be claiming. The reason I say this is with the amount of data and technology that's available to the ATO, it's really, you really can't be claiming things you're not eligible to claim. You may get away with it in a year or 2 years, but believe me, you've got a 7-year period where you know there could be some issues. So it's never worth it to put in a ton of deductions to get a refund only to be reviewed to pay interest and penalties on some of those things. So don't do anything dodgy, in short. And so point number 3, a little bit opposite to point number 2, is that claim everything you are legally eligible to claim. Really know what you can claim. For all our clients, we go down the list of tax deductions to make sure that they know everything they can and maybe cannot claim. There's also, this might be a 4th tip, there's also a guide on the ATO's website for each industry outlining what is common for your industry. So if you're a pilot, there would be, you know, a list of deductions that most pilots would be claiming, and that's typical of that industry code. So check that guide out. We find really useful for a lot of our clients as well.
Awesome. I'll leave that down in the description box as well, down below. But thank you, Jacob, so much for being on my channel. I know you provided a lot of insight to my audience. And if you are interested in booking Jacob's services, I'll leave all of his details in the description box as well, so be sure to check out his stuff. He's an amazing accountant. I'll leave his social medias as well, so be sure to follow him on there. But that's it, guys. Thank you so much to Jacob for being on my channel, and I'll catch you guys soon in my next video. Thanks, guys. Bye.
My hair looks fine.
Yours is all set in place.
That's it. I woke up a little.
Okay, cool. So, feeling really warm. Okay.
Yeah, it's hot.
Okay, so I'm gonna get started.
You're so funny.
Bro, I'm just as nervous as you are.
I'm not nervous.
Oh, you're not? Well, maybe you can do the intro then.
God, what am I saying to the people?
Okay, no, I'll do the intro and then I'll
no.
Okay, so Jacob. Oh my god, it's so funny. Okay.
Go. No, I've stuffed that all up. Can I go again?
Yeah, you can go again.
Alright, dude, I scrapped. I'm gonna go from the start.
Yeah, that's fine.
Okay,
cool, go for it. Cool. And if you are interested in booking Jason's sorry, not Jason. Oh my god.
That's so funny. So, go.